Up, and away. The yield on the U.S. 10-year Treasury is now up around 60 basis points since the Fed cut rates by half a percentage point in September. Why is the yield on the 10-year rising? The 2-year and 10-year U.S. Treasury yield curve disinverted in early September. In my October 3rd video, it was mentioned that if the yield curve were to continue to steepen, it is likely that the long end of the yield curve would rise, rather than the short end would fall much further. And since then, the yields on 10-year Treasuries have continued to rise, and now it's around 4.24%. The Fed cut rates and the yields move higher instead. Isn't that counterintuitive? So what does this surge in yields mean? What is it telling us? The possible contributors include U.S. growth, election prospects, debt and deficits, eroding foreign demand, and so on. If the economy is going to do better, inflation could increase as the economy improves. Thus, rates rise in response to increased inflation. And of course, an election is approaching. What we know now about both candidates for the next U.S. president is that their proposals are not deficit-friendly. Either candidate's plan could be inflationary, and that's what we could be seeing in the long end of the curve. The rising Treasury yields could be a driving factor of financial markets. Among other things, attractive yields could lead investors to increase bond allocation at the expense of stocks. We've been at this level of yield before. We've seen this move before. What do you think the bond and equity market would do this time?